Today, government loan guidance from FHA, OIG, and MBA says that mortgage credit is tightening. Meanwhile, record volume, where's all this going? Let's wait and see. Hey there, Troy Garris at Garris Horn. Today we're going to be talking about a number of different things. But first, before we get going, I want to tell you about an event that happened last week. We had our very first happy half hour. It was designed to just be relaxed in a setting with a bunch of mortgage professionals. We had a great time. We had some great people that attended, and I want to give special shouts out to a few people. We had Pam Jenkins of Willow Bend Mortgage. We had Sophia Garris, who is studying finance. My daughter actually studying finance up in New York. And she joined us to listen in a little bit. We had Aaron D. of Loan People. We had Josh Weinberg of First Line Compliance. Just a good number of solid people. There are more. I'm not mentioning everybody just because of lack of time. But I just want to tell you that, first of all, thank you to you who attended. I think there was some good information shared. We're going to move it, actually. So we have this one on Friday, and we are going to move that to Thursday. I think it's just a little better time, and we talked amongst ourselves about what would be the best day of the week for a happy half hour. So we're retooling a little bit. I heard a little bit of feedback afterwards, too. So people liked it. And we think the time is better. It's going to be, from now on, it's going to be on Thursdays at 5 p.m. Central. So we're going to do it at that time. And it's going to be a recap and interaction of mortgage-related developments that occurred during the week or just in recent times. So people can get to know each other. We can connect. We can share information. We can talk in a very friendly and casual and relaxed environment. It's alcohol optional. It's designed to be kind of a happy half hour. It went long. So I can expect it for that to happen. But, I'm labeling it as a happy half hour, and you can, show up on time if you're going to join. All you got to do is send me an email and I'll get you in, Troy at Garris Horn. But show up on time. But then if you need to leave early, that's great. And if you want to stick around and let the conversation continue, we can do that too. So again, thank you to everybody. Again, I'm not mentioning a lot of people. So there's Ruth Lee, there's others. Everybody just had some, first of all, everybody is a delightful personality and warm and friendly and sharing and engaging. And then also, they all had different angles on the marketplace and different input, it was a good session. Again, we'll continue that. That's going to be Thursdays at 5 p.m. Again, if you want to join us, at the moment we're keeping the circle kind of small because we don't want it to get too large, and we'll let it evolve. We'll see how it goes. But the idea is to relax, unwind, and share information. That's the first thing. Second thing is this live stream is going to occur. It's going to be on Mondays and Wednesdays, 11 a.m. We're going to try to keep it relatively short. It's just to make it efficient, get you information that you need, developments that you need to pay attention to, and get that information out. Mondays is going to be mostly focused on having new information, developments that have occurred during the past week or over the weekend, things that you need to be focused on for this coming week in the regulatory and business environments. And then Wednesdays are going to mostly be, we're going to have a guest on to talk about some segment of the industry. It'll be business, it'll be compliance, it'll be legal, it'll be all these different angles, operations, anything that you want. In fact, this Mortgage Banking Live stream is really designed to help you. So if you want to tell me what you want to have on here, we'll try to make sure that that happens. If you want to participate, you want to be on this, or you want to be on the included in the happy hours, you just let me know, and we'll try to figure out how to make that happen. And we'll make it interactive, make it fun. This is a live stream, so it's possible that things go awry, but you know what? That's what happens in the real world. And so we're going to learn how to wrestle with that, deal with that, and we're going to make it fun and enjoyable and get you the information you need. So a couple of things that we want to talk about first today to get this information to you. First of all, business is strong. Business is definitely strong. It is changing, though, and I think based on our conversations last week, we can feel this, and people that I talk with in the industry just generally, we can feel this. We have had record volumes. We've had record types of production in the mortgage industry that is just making people feel really good. Lots of lenders that are reporting record volumes in production. All of that is good news, but as you know, the COVID-19 pandemic has affected people in a lot of different ways, and much in ways that we don't really understand. The health officials don't understand it yet. A lot of states here and there are starting to open, at least partially. Texas here, where I am sitting right at the moment, they are starting to reopen. Other states around the country, little by little, starting to reopen in different ways and different waves. And this is the administration is leaving this up to the states, and it's happening piecemeal. And we will have to see where this goes. Meanwhile, we don't really know what the effect was, of course, on the downturn and all the businesses that have been closed for a time. We don't really know, and we haven't seen the numbers yet. They're coming out little by little, but we haven't really seen the numbers and the impact that that's going to have either on the economy or on people's abilities to get qualified. As you know, the mortgage market is changing all the time, just in general times, and now it's changing rather dramatically and unpredictably in this time of this weathering through and figuring our ways through this pandemic. So one of the things that has developed is the MBA. Wonderful shout out to the MBA. Wonderful organization. If you're not a member, join. If you're not a member, at least of MA, Mortgage Action Alliance, join that. Great organization. But the MBA took some information, some data from industry, and came out with the Mortgage Credit Availability Index. And the index shows that the numbers, that mortgage credit is tightening. And I don't know if you guys are feeling this, but if so, shoot me a text, shoot me an email, or you can just comment here on the site, just down below. But credit seems to be tightening. And there was drops across the board. Now, these are aggregate data, right? So in any particular segment, you may find little differentiations and so on. But on an aggregate basis across the nation, there are strong spots, and there are definitely spots that are not quite as strong, but mortgage credit is tightening. So overall, the credit, the credit has tightened more than 12% overall. Conventional applications tightening 15%, more than 15%. And amongst those jumbos in particular, there's been the index has tightened quite a bit, over 22, almost 23%, conforming less so, 7%, just over 7%. In government loans, close to 10%. Those are the numbers. I'll tell you the MSRs too. Garrett McCauley has a great publication that comes out once a week, and Garrett McCauley reports that in its publication just this past Sunday, the MSR valuations have changed quite dramatically or significantly as well, at least with the big players, in the ways that those MSRs are being valued. I recommend Garrett McCauley's publication. It's a good organization, good information, and those guys are both friends of mine and friends of the industry, and they have a lot of good insights and information that you can get from them So I recommend that for you. So that's on the business side. Let's talk about compliance and legal for a moment. And again, I tell people every time, this is not legal advice. There's, if you comment here, if you send me a text, you send me an email like this is not, it doesn't form any sort of attorney-client privilege or relationship, but I can help you answer, I can help get information to you. And so just keep that in mind. Also, if you make comments, don't put any information out there in the world that you would want to have protected, because that's not going to happen. If you put it out in the world, there's no privilege there. So in the compliance world, the CFPB came out with a fair lending report just at the end of the month. And the CFPB, as I mentioned last time, the CFPB is really focused on fair lending. I'll tell you, we've had some interactions and people discussing interactions with a variety of different regulators. But we know for a fact that the CFPB, and we hear through the grapevine, the CFPB is focused on fair lending. And in its fair lending report, a couple of things, I'll just name them off here for you. The CFPB says in its report, this is a report to Congress, CFPB says that it is using a risk-based approach to determine when to conduct supervisory exams, when to conduct investigations and enforcement. And it says that it uses a risk-based approach using market data, and it also focuses in on whistleblower information, and it focuses in on advocacy groups complaining about one particular lender or another, focuses on supervision history, and also takes a look at some HMDA analyses. And as you know, the HMDA data, the HMDA Plus data now, is giving the regulators a lot more insight, and giving the advocacy groups too a lot more insight into what lenders' data might look like if you dig down. And so just an area that mortgage lenders really need to be focused on, because even though I hear, everybody hears that regulators have slowed down in terms of enforcement and in terms of supervision and aggressiveness, I don't think that's true. And in certain areas, in particular fair lending, I think that you can see, if not the same amount of assertiveness or aggressiveness, perhaps even being that those positions being ramped up. And so you should be very careful in this area and be thinking about issues there. Are you taking a look at your HMDA data? Are you taking a look at your information, the way you're operating? Are you taking a look at your marketing? We know that the CFPB and FRB also before it for a long time has been focused on redlining. The report says that they're focused on redlining. They're focused on reverse redlining, which is the situation where a lender allegedly focuses on a particular area, and instead of not making loans, they make loans that are less advantageous than they might make elsewhere. So reverse redlining is a focus. It's that they don't call it that in the report actually, but that's, reading between the lines, that's what they're talking about. They call it steering and discriminatory underwriting and pricing, but that, in a nutshell, that's what they're talking about. And then they're also focused on, and this is, take this hat off, they're focused on HMDA data integrity. So if a regulator comes in, it's not just CFPB, but if a regulator comes in and tells you that they're interested in fair lending, and it turns out that the regulator doesn't find at least the smoking gun of a fair lending problem, very possibly they will still find, if you are not keeping good records, if you're not making sure that your HMDA data is entered properly, they can still come after you for HMDA data integrity. And so this is an area where we find a tremendous amount of risk, and people we talk with and some of the settlements we see over time, you see that people settle on not necessarily fair lending problems in the sense of discrimination, but in terms of data integrity, just information that is in your system, that is out there public and visible for people, that itself can cause you trouble. So you need to be very careful about how that system is set up, and you need to make sure that you are taking care that you get that information in properly. So there's this report. We'll dive into the report more in future streams, but I'll tell you, I can send you the report. It's good to look at. All you got to do is shoot me an email, Troy@GarrisHorn, and I'll send you the report, and you can take a look at it yourself. I can even highlight a couple of areas for you if you want. Couple of other items that are of interest. There's the government regulators put out some guidance on forbearances. So we're talking VA, FHA, USDA. They put out a joint pamphlet on guidance for how to treat borrowers that request forbearances under the CARES Act. I'll just give you a couple of points from there. It says if the borrower can still make the payment, you can ask them to make the payment. If the borrower calls you and says, "Hey, I heard about this forbearance program or some sort of relief that I can get," the pamphlet says that you can ask whether the borrower can still make the payments, and if they say they can, then you can ask them to do that. But all they have to do is say that they want forbearance, and all they have to do is say that they have a hardship, and you can't deny the forbearance. So virtually, it's sort of like the old no-doc loan programs, right? It's no verification of your hardship. All you got to do is say you have one as a borrower and have one of these government loans, and this pamphlet says that they're entitled to receive that forbearance. The forbearance can be 180 days, up to 180 days the first time around, and then they can ask for another 180 days. So they can request a total of 360 days at the moment, and not even have to prove their hardship. All they have to do is say that they have one, and they're entitled to that forbearance. One thing that one item that the government document says that you should do is you should explain to the borrower, and this is to prevent the payment shock downstream. You can say to the borrower, "Look, you understand that this is not necessarily that your payments are going to be waived. It's not that you don't have to pay anymore. It just means that the payments are going to be deferred. It's going to be a forbearance. It's not going to be a waiver of liabilities for the payments." And so, that's something that borrowers really need to understand, because, it's going to be a complication. And this is an area that really nobody knows where this is going to end up. So it's something that you really need to be thinking about. And you can also you should also tell the borrower that they can resume payments anytime they want to. So they don't. If they ask for 180 days forbearance, they don't have to wait the 180 days. They can restart paying anytime. And so that's something that this government document from HUD, VA, USDA says that you should tell the borrower just to make sure that they know. Another item that came out, again, I can send you this information. A pamphlet came out from HUD, the HUD OIG, actually, the Office of Inspector General. And this document says, really it's designed to help borrowers, to make sure the borrowers are not tricked into various scams that the OIG says that it has seen a ramp up in. So things like spoof calls and fake scam emails where people are saying, "Hey, I'm from your lender, I can help you out," or "I'm from a service that helps people out and I can get you out of your payments," and so on. The moment tragedies happen, it creates a hotbed of activity for people that are quick with scams and quick with scandals, and try to come in and take advantage of people that are in very unfortunate situations sometimes. And so OIG is trying to get ahead of that and make sure that people have this information. This would be a good document that you might want to provide to your borrowers, so that they know that that there are these criminal elements out there and deceptive elements out there that might be trying to take advantage of them and might not actually be providing a service and may not be from you. So this information I think is helpful. It's mostly focused on servicers, but you know what I know is that these days, even people who thought they weren't servicers, they thought they were just originators, at the moment, they're servicers. They really are. And a number of people that have, gotten in situations where they've closed a loan, for example, and then they couldn't sell the loan because the borrower asked for forbearance. We've heard the rumors, we've heard the legends, true or not. I'm certain some of it is true, where people stand up from the table or walk home, go home, and call the company the next day and say, hey, I heard about this forbearance item, this forbearance relief that I can get. So yeah, I want forbearance. And then an originator who thought it was going to sell a loan the next day or several days down the road, but certainly within a limited time period, that originator can be stuck holding that loan. And so this is an area where both originators and servicers need to really pay attention. Again, I can share that document with you. So that's it for today. I'm trying to keep this short. Watch out for us Wednesday, 11 a.m. We will have, actually, we're going to have a good speaker this week. I won't tell you who it is yet. But we're going to have a good speaker on. We're going to have a little bit of additional information on an update. And then Thursday, if you want to join the happy hour, let me know. And the numbers of spaces are somewhat limited because we don't want too big of a group. But it is a happy hour designed to recap some of the information from the week and some of the developments of the week and let people get to know each other. There were several people on last week's call that they didn't know each other. They were in similar business, different roles, different types of companies, some of them vendors, some of them lenders. But people who have been around for a long time, they just didn't know each other. And so I was happy that they got a chance to share information. All of them stellar people. This is only the cream of the crop that even get in. And, they were able to make connections, make new relationships, form some new connections, and hopefully develop those relationships. So this is the Mortgage Banking live stream. I'm Troy Garris. If you need to reach me, it's 301-461-8952, although that's down in the comments or in the description below also. And so you can reach out to me. Again, it's also Troy at Garris Horn. If you want to shoot me an email instead, you can text me. You can just comment here on YouTube, whichever makes it easiest for you. But hopefully this information is helpful. If you need those documents, let me know. I'm Troy Garris, and that is the law.